All right, guys, here we go. Wednesday, August 3rd. And this is really a follow-up video to our video yesterday regarding Robinhood and their earnings report, symbol HOOD. And as we mentioned on yesterday's video, that, there was, a couple of, positive things on the earnings call, but mostly negative. But I think the biggest negative, which ended up being a positive, and we told you it probably would be, as crazy as it sounds, is that they are going to be laying off 23% or so of their workforce. All right, and having spent years, in the markets and stuff, and listening to these, hundreds of earnings reports, and whenever that comes out, like I said again, as crazy as it is, when the street hears that a company is laying off a huge portion of their workforce, high percentage of the time, the stock will pop, move to the upside. And that's exactly what we saw today. This blue arrow is indication of that. And as we mentioned in the video, and our Patreon members, we had a potential resistance zone here at that 0.5 fib, and then right above it at that red dashed line we had a little high pivot, and these pivots are just a 180 reversal in price, either to the upside or downside. If it's on the upside, it's green, and then obviously a red candle pivot 180 to the downside, and then reverse on the downside to the upside. So anyway, a little bit of headwinds here for Hood. And you can see there was a little bit of profit taking, at the end of the day here as it sold off a little bit. Doesn't mean it can't, go sideways and then continue up as we're above the 20 and also the 50 simple day moving average. But anyway, I just want to follow up with that. And whenever you hear, for example, that unfortunately, Hood was up 11% today. But anyway, just for future reference, when you hear that a company's going to be laying off, a portion of their workforce, keep an eye out for that. To me, it's bad news. It's not good. But for whatever reason, I guess they think, payroll is your biggest, reduction in profit, and it takes away from that bottom line. And I guess people think, when you reduce that, and obviously that's the reason why they do it, is to help the bottom line. But you still have other issues, other concerns within the company, aside from too many employees. And then on a side note, our Patreon members, we put on this. We go to the hourly chart. As you can see right across the top here, we put on this short position on the micro WTI crude oil futures, and we just rode it throughout the day. We never got a green candle until the end of the day that took out a previous candle, so we just kept short here. And the reason why I say that goes, like they say, cut your losses short and ride the trend. Let your gains ride, and that's what we do. That's what we teach. So, and also with this micro futures, you don't need, for example, 25 grand to get in the game to be a recognized pattern day trader. I believe all you need, has been a while since I looked. Anyway, I think it's $2,100 to trade the micro futures, and then even the E-minis, the micro E-minis of the S&P 500 here on the daily. You don't need much, initial investment, initial risk. Now that investment is at risk, like any investment in any market, anywhere, anytime. There are risks in the market. You can lose everything or part of it, or whatever. But at some point you're going to lose something, and we teach you how to handle that loss, how to get out, with the smallest amount, et cetera, et cetera. But anyway, thanks for watching. Come check us out on Patreon, and we will see you on the charts.